despair, summer despair, people wondering where the God candles are. I tend to think that, as usual, markets are going to swing, the pendulum's going to swing, and it's just not going to go up on the same curve forever at the, every single day. That would be 100% R squared. Bitcoin's a 96% R squared, so that's why you get moves like this. All right, into the Goldilocks zone, the 90th percentile and above, which usually takes 3 or 4 months max before it falls back out of that zone. This is the green, counting the green days above 90th percentile right there. You see the green price, and then the green mountain there is days. I think it's going to happen again. But what I have been talking about in prior streams recently is this idea of how Bitcoin is a network. Bitcoin grows in power. All right, it grows in power in time. Nothing else does. All right, stocks, bonds, ETFs, gold, money, all of that grows exponentially. Exponential has a problem, though, in that usually, not always, but usually, you reach a situation where the system gets unstable and some paradigm shift happens. The math becomes too strong. I think that probably happened during the old debt jubilees in ancient times. Probably happened during some collapse of empires in medieval times. There's no way necessarily to know when that collapse or that paradigm shift, when we move into a different system. For example, when we moved from gold to fiat, which really was a process that took like 100 years. Now let's say 60 years, from 1914 to 1971. That was a paradigm shift. We're now experimenting with fiat only. We have Bitcoin coming in, could be another paradigm shift. Here's my question, and I've been talking about this a lot, and I think it's a really, really interesting one that no one is answering. In every paradigm shift that we had in the history of the world, we were usually moving from exponential to exponential. So whether it was silver to gold, or gold to fiat, or some old gold standard to a new gold standard, the system itself was always growing exponentially. And that just simply means constantly. Constantly, 2% per year, 3% per year, 7% per year. That's what I'm measuring right now if you add up fiat-based money and gold. So you get a situation that looks like this, all right? This is TradFi-based money. Talked about this before, all right? Zoom in. This is clearly exponential growth. This is log scale. Lower left to upper right looks pretty much like a straight line. I'm not even drawing the trend lines. Let's keep it very, very simple. But I do have the trend line when you extend it out. All right, so this is the trend line. On this chart, again, I'm always changing things, but I'll tell you exactly the R squared, just so you know. On this chart, this trend line, which grows at 7.3% per year, the R squared is 93%. Pretty good. Pretty good. Exponential fit, 93%. All right. And you can also graph the constant growth right here. Okay. I could show actual trailing 12-month growth would be up, would be down at this point, but I'm just keeping it extremely simple. This is what you would call the slope of the trend, 7.3% per year compounded. All right, this number, this 43 trillion, is your unbacked monetary base, which is just all central bank money, minus your gold and Bitcoin reserves. There's about 15 billion in Bitcoin reserves, plus available gold, plus available silver. It's all money past and present. It's my sort of Bitcoin dominance index. But we have this situation where if you draw base money or any asset which I'm about to show you here, which makes it more interesting. On log linear, just basic log scale, you get a straight line. But what we have clearly established, I think, myself and a lot of the folks from the power crew or the power law crew, Bitcoin intelligence people, Giovanni, is that what happens here, if you graph Bitcoin over time, you get what looks as this sort of slightly asymptotic concave down trend line. All right, here's the trend line. It's a 96% R squared. Okay, so an even better fit than this fit, which I'm not showing you on the tooltip, but it's 93% R squared. Let's put them together. I've shown this a lot. All right, so here, this is a monthly frequency. Let's look at the Bitcoin network now in power. I'm going to zoom in a little bit. Okay, here we go. Talked about this. It seems to me that we'll meet somewhere around 155 trillion. And even though fiat money grows at a constant 7.3% per year in this metric, right? This is the straight line, the straight dotted line. Notice, by the way, how flat the actual money supply looks compared to Bitcoin. Right? So you can see the growth is slower. It's a shallower curve here. If we would graph Bitcoin's trailing 12-month growth rate, it's extremely fast at the beginning. This is this power curve growth, right? Thousands of percent in 2010, 2011, based on the price chart. And this is actually based on the trend of the market cap. Gradually falling down to where we are today, about 46, 45%. Again, this is the difference between price and market cap. Price is going to be closer to 42% by the end of the year. Market cap is 44. But we're way faster than fiat. Now, I've extended this chart now out to the end of the century. Before I had it, I think in 2050. You see the flipping occurs somewhere here. Okay, this is just a coincidence that that crosses right there. The flipping is right here. You put a dominance index, you see that it's creeping towards 100% right there, right? So where it flips around 2043. Now, Bitcoin grows so much faster than the way that money grows that we don't really have to think about anything else. Like, it's obviously when sats become a standard, when the world is thinking in Bitcoin terms, things will change. But the question that I have been positing to this stream is, how will contracts work in the business world? Because TradFi is still, the way that money is growing is still going to chug along at that 7% per year, presumably.